Good morning. Welcome to Stock Market Today. It's Tuesday, March 2nd, 2021, and I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter. I'm at DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email where I get a lot of the content for this show. We also give you daily stock ideas to consider. Those hit your inbox every trading day before the market opens. So U.S. equities finished higher Monday, closing near the best levels of the day. Broad-based rebound. All sectors were positive. Financials, tech, and industrials were the big gainers. Staples and healthcare lagged the broader tape, as did REITs. Treasuries were mostly stronger alongside the rally in global sovereign bonds. Remember, this backup in yields has been a global phenomenon. The dollar was stronger against the yen and euro. The gold finished down 30 basis points. Bitcoin rose by about 4.5%. WTI crude fell by 1.4% on the day. As we get to the desk this morning, a little bit of a give back. S&P futures are down 40 basis points after Asian markets were weaker overnight. China and Hong Kong both down over 1%. European equities are mixed. Treasuries are mostly stronger, especially in the middle of the curve. And remember, it was the bad 7-year auction last week that was kind of a catalyst for the spike in rates. The dollar was stronger on the major crosses this morning. Gold is up 10 basis points. Crude oil is up 30 basis points to kick us off on a Tuesday, a day when we do sector relatives. We'll touch on that a little bit later on. But first, the major market averages. It was a broad-based rebound. Strength was there across the board. All right. The levels have not changed. The roadmap remains the same. The trend is up until proven otherwise. I don't want to belabor the point, but it is the point. So we are in an uptrend. We have our key levels defined. If we're above those key levels, it's hard to be anything but bullish. You start to take out those levels, the roadmap starts to change. The views start to change. The keys are where, right? We know we're in an uptrend. Where are we within that uptrend? We're now oversold within that uptrend. So we know, when do you want to lay back? When do you want to attack? You want to lay back when you're overbought in an uptrend. You want to attack when you're oversold in an uptrend. So we're kind of more towards the attack mode, obviously. And the question is where? And what's happened now and what I've been writing about for the past few days is the cyclicals, right? The reopening, the reflation are overbought. They're extended to the upside. Commodities, and the secular growers that were hit over the past 2 weeks are now oversold. So if we're thinking in terms of rotating where we look for ideas, I think the idea focus now should be kind of in the growth years, secular growth areas of the market, if still maintaining that balanced approach that we've been advocating for equity allocations on the long side of a portfolio. You see the key levels here. They're outlined. SPY still has upside to 413 in my book. The uptrend is there until proven otherwise. Let's hit our market in a minute. What are we writing about? Well, we had a sharp rally after reaching oversold levels. We touched on that. Cyclicals remain solid leadership. They are leadership. There's no two ways about it. Financials, energy, right? Commodity and commodity leveraged equities. They're just overbought. They're stretched to the upside of the near term. Defensives continue to lag. And what's interesting here is the defensives continue to lag even in a choppy tape last week. Right? Market was under pressure last week. You'd think there'd be a little bit of a flight to safety in things like staples, REITs, Utes. Didn't happen. Right? So even in a choppy market, the defensives continue to lag. That's a bullish data point, in my opinion, for the market in general. Add on another bullish data point, the fact that micros caps continue to just be solid leadership. That's risk on sentiment, in my opinion, as well. I touch on that in the note. We're not going to get into it here. Feel free to take the 14-day trial and read my note every day. Futures point to a lower open today, as we said. Now, let's look at the major indices. Power bar perspective, shift back towards bullish stance. The Dow adds nearly 2% yesterday, 9-6 bulls to bears. S&P up 2.4%, 140 to 47 on the ratio there. Nas, big outperformer, up 3%, 24.17 bulls to bears. Remember, yesterday it was 20 to 20, so big shift. Small caps, also big outperformer, sending that ratio higher. Again, 775 to 161 after the 3.6% rally. Bonds down tick. In tech, your big group on the upside yesterday, 3.2% to the good, 28 to 3 bulls to bears within the tech sector. So The rally remains broad. Puts and takes, different areas doing well at different times. But in my opinion, the rally remains broad, and we want to stay on the right side of that. According to the Chaikin Power Bar, small cap stocks and large cap stocks are strongly bullish. Sticking with the theme that we've been running with for a while now, Tuesdays, we do a bullish screen, and this one's fairly straightforward. We have some pre-canned screens, or what we call starter screens in Chaikin Analytics, and something that we call classic bulls. A classic bull is a bullish or very bullish stock that's in an uptrend, outperforming the market with strong money flow and strong relative strength. I broadened things out to the Russell 3000 and said, let's start with the Russell 3 as a universe, 2,813 stocks. Give me the ones that are bullish and very bullish. Well, there are 950. Give me the ones that are above their rising trend line. Well, there's 919. And then we drill down from there. What's oversold? What has strong money flow? What has strong relative strength? And we get down to 22 stocks that may be compelling. Now, 22 stocks. Remember PTC yesterday? That was my stock that we were highlighting. Broadcom is a name that we recently highlighted in a note for clients. PayPal, another interesting name within the space. Texas Instruments, right? It's a note that I highlighted in my a stock that I highlighted in my note to clients recently. So you can see the process. This is how I go about it. Keep an eye on CoQ here. They priced an offering last night. Stock was trading under pressure this morning. Been a name that we've liked, but under pressure here on the heels of their offering. So might be one to take a look at. I'm not sure. Crocs. I mean, the shoes are ugly, but the stock looks good. So 22 stocks here. Feel free to take a screenshot and do some work on those. See if they fit in your process. Let's look at our sector tracker now. Moving in the last 5 days from the major sectors. Still that cyclical feel at the top, which makes sense. They're overbought, right? So that means they've been strong recently. Energy, fins, and industrials. Comms have come on strong. We're going to look at XLC on a relative basis when we get to our charts. Tech, nice day yesterday. We want to see that continue. Materials as well. And then take a look. This is still, right, again, if this was all green, it would be better, but this is a nice board, right? I would like to say when it's a nice board. Nice board is when we have our cyclicals leading. We have some secular strength as well, right, with comms and tech. And then you have your defensives, utility staples, and REITs at the bottom of the list. Now, if we were all higher and those three defensives are at the bottom of the list, that'd be great. But it's not. But still, a decent looking board nonetheless. Take a look at our industry in focus now. Bank services, which by now we've hit this one pretty hard. Past 6 months, banks have outperformed by 46%. Power bar ratio, which looks at future potential, very strong. 58 bulls to 0 bears. And that's not even the top ranked group. KBE, not the top rank. Number 2 of 21 subsectors. Names like BPOP, Banco Popular, PacWest, PACW, and Citizens Financial, CFG, all with very bullish ratings and all holdings in a fund that looks like this, up and to the right. Up and to the right. Now, you see what I'm talking about here, how we were stretched above the upper volatility band and overbought. Now we're working off the overbought condition. Very bullish. There's the ratio, strong trend above that rising long-term trend line. Solid money flow, solid relative strength. So rating turns bullish. Relative strength follows right after. Now you have a leading group outperforming, right? I mean, this is the process that we look for. The question is, right, what's the trend? Up. Where are we within that trend? We were overbought until about 2 days ago, and then we started to roll off here a bit, but that's fine. When do you want to attack? When you're oversold within the uptrend, right? The time to get aggressive in this uptrend is in this, oversold. Closer to oversold. This one was a head fake, in fairness, but maybe not here. That's the process. Know when to lay back, know when to attack. Identify the trend, great. Identify where you are within that trend. Know when to lay back, know when to attack. Let's look at what's trending now. Yesterday's movers and shakers, gainers and losers. Dentsply, X-ray earnings, send the stock higher by 12.5%. Etsy gets some follow through after their report last week, another 11% yesterday. NRG earnings. NRG rallies by 10.5%. Some big moves still on earnings. IVZ, asset managers were positive yesterday. IVZ, bullish stock, goes along for that ride, up 10.4%. And Disca, didn't see any news on Disca. up 9.7% on the day. Loser side of the board, SBAC, nothing company specific, down small, 2.8%. Albemarle is selling a business. They take 2.7% out of that stock. Royal announces a secondary. We'll take 2% out of that one. Carnival goes down with the cruise ships as well, 1.6%. And EXR, didn't see any news there, but will note that stock did catch an upgrade today. So maybe see if that one gets a little bit of a rebound to the extent that that one is on your radar screen. I want to readdress gold because this is something that I pointed out last Tuesday in my note. I thought there was a positive risk reward opportunity when, the fund was GLD was trading at about 167. I thought there was upside to 180, downside through 165, setting a nice risk reward. Well, we broke the risk level. So I think it's only fair if you're going to call this out like I did to identify that it went wrong. Pull back, cut below 165, right? Clearly defined risk level, but that's the case. So gold to me needs more time to base before a sustained move to the upside can be expected. Now, take a look at the RSI. It's oversold. Take a look at GLD relative to SPY, right? So it's stocks over rocks, as my friend JC likes to say. And that's clear, right? I thought that there was a trade to be had and defined it. Said, above 165, play for 180. So it was kind of 2 points of downside for 13 points of upside. We didn't get there. We got the 2 points of downside. So I think it's only fair to point that out. If I often will highlight where we've touched on things that have worked out. I think it's only fair if I'm going to be completely objective to point out where things didn't work out, where, here was an idea, I presented it and it didn't work. We're below the 50-day moving average, below the 200-day 50 crossed, right? So it's just a hot mess at best. Maybe it bounces here. I don't know. But there's no trend here. There was a trade that I thought could be had. It didn't work out. There's no trend here. Needs time to kind of figure itself out. Comm services, new highs. I said we'd touch on this. Check this out. Since this fund was reconstituted, since this sector was reconstituted, we've now hit our highest levels. XLC, highest relative levels against the SPY since reconstitution. Momentum behind the move with the RSI pushing towards overbought levels. We're above a rising 200-day moving average. Now, within the framework of Chaikin Analytics, the ETF is bullish, 6-2 bulls to bears after a nice rally yesterday. So remember, this group is interesting. This is where Google lives. This is where the gaming companies live, Activision, Take-Two, things of that nature. Facebook lives in here. In addition to the other the traditional stodgy comms companies like AT&T and Verizon. So an interesting mix of both offense and defense, but trading at all-time highs on a relative basis. So that's kind of interesting. We always want to identify where is strength, and there's strength here in the comm services space. So that's kind of an interesting dynamic that's playing out. And then finally, I'll leave you with this chart that you've seen. But again, think of last week. Think of the dynamic last week with stocks under pressure. Really been under pressure for about 2 weeks since topping out Feb 16th. And in that time frame, your defensive sectors on a relative basis, starting at the top, utilities, then REITs, then staples, can't get going to the upside on a relative basis. REITs a little bit. In fairness, kind of a little bit, but really nothing. Still below declining 200-day moving averages. So what does that tell you about the market environment? What does it tell you about the market environment when the cyclicals are leadership, when things like comm services are breaking to relative highs, and your defensives are at the bottom of the list? Go back to the board. Go back to the sector tracker. It's a good board, right? I think that's bullish ultimately from a big picture perspective for the market. So I'm going to leave it there. Take us for a test drive. I'm back tomorrow.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.